Imagine walking into your favorite coffee shop and handing over $5 for a drink you'll finish in 10 minutes. Most people see this as a harmless daily treat, but they are unknowingly burning a hole in their future wealth. What if that same pocket change held the secret to a life of total financial independence? We are often told that building a fortune requires a massive inheritance or a high six-figure salary. This common myth keeps millions of hardworking people stuck in a cycle of living paycheck to paycheck. The truth is much more shocking and far simpler than the financial gurus want you to believe. Today, we are going to pull back the curtain on a mathematical phenomenon that turns tiny, insignificant amounts of money into a literal mountain of cash. You don't need a miracle or a winning lottery ticket to change your life forever. You just need to understand the invisible power hiding inside your daily habits. This cycle of casual spending isn't an accident, it's a byproduct of a consumer culture designed to keep you focused on the present moment. For decades, we have been conditioned to prioritize immediate gratification over long-term security. Every advertisement and social media post reinforces the idea that small purchases are irrelevant to our overall financial health. Historically, the concept of saving was a cornerstone of a stable life, but the modern economy shifted that focus toward debt and consumption. As inflation eroded the value of the dollar, many people began to feel that saving small amounts was a waste of time. They started believing that if they couldn't invest thousands at once, there was no point in starting at all. Psychologists call this the present bias, where our brains value a reward today much more than a larger reward in the distant future. This mental trap makes it easy to justify a $5 coffee while ignoring the massive opportunity cost of that capital. We see the drink in our hand, but we fail to see the potential fortune slipping through our fingers. While wages have largely stagnated over the last few decades, the cost of living and the temptation to spend have skyrocketed. We are surrounded by subscription services and microtransactions that bleed our bank accounts dry in tiny increments. Most people don't go broke from one big mistake, but rather from 1,000 small, unnoticed leaks. The idea that small savings could lead to wealth gained traction when financial experts began analyzing the habits of ordinary millionaires. They discovered that most wealthy individuals didn't strike it rich overnight through risky gambles. Instead, they built their foundations on the boring, repetitive habit of consistent, disciplined allocation of capital. At the heart of this strategy is the principle of compound interest, which Albert Einstein famously called the eighth wonder of the world. It is a mathematical engine that takes your initial contribution and generates earnings on top of previous earnings. Over time, this creates a snowball effect where the growth eventually outpaces the original investment. Despite the simplicity of this math, the financial industry often makes investing seem like an exclusive club for the elite. They use complex jargon and high minimum requirements to discourage the average person from taking control of their money. This creates a barrier that keeps the majority of the population on the sidelines, watching wealth pass them by. To truly understand how $5 can change your destiny, we have to look at the raw data and the historical performance of the markets. The numbers don't lie, and they tell a story of incredible growth that is available to anyone willing to start. Once you see the actual trajectory of a small daily investment, you will never look at your spare change the same way again. This journey begins with a look back at the last century of economic history. Despite wars, recessions, and global shifts, the stock market has consistently climbed higher over the long run. It is a resilient engine designed to reward those who have the patience to stay the course. Think of the S&P 500 as a collection of the 500 largest and most successful companies in America. When you invest, you are essentially owning a small piece of the giants that drive the global economy. This diversification protects you while allowing your small contributions to ride the wave of corporate innovation. Many people hesitate because they are waiting for the perfect moment to enter the market. They try to predict the next crash or wait for a dip that might never come. This strategy of timing the market is a trap that often leads to missed opportunities and lost gains. Real wealth isn't built by being a genius trader or having inside information. It is built through time in the market, which is far more important than timing the market. The earlier you start, the more time your money has to work for you while you sleep. This concept was popularized as the latte factor, highlighting how small daily luxuries add up over decades. It isn't about depriving yourself of joy, but about recognizing the opportunity cost of every dollar spent. Every $5 bill is a seed that has the potential to grow into a massive oak tree. Keeping your money in a standard savings account might feel safe, but it is actually a slow leak. Inflation constantly eats away at the purchasing power of your cash, making it worth less every single year. Investing is the only reliable way to outpace this invisible tax on your hard-earned savings. Most people feel that $5 is too insignificant to make a difference in the long run. They believe they should wait until they have thousands of dollars before they bother opening an investment account. This psychological barrier is the single biggest reason why most people never reach financial freedom. To break this cycle, we must shift our perspective from immediate gratification to long-term vision. We need to stop seeing $5 as a cup of coffee and start seeing it as a building block for a legacy. Now, let's look at the specific numbers that prove just how powerful this shift can be. If you take that $5 and place it into a standard index fund with an average annual return of 10%, the first few years might feel underwhelming. You see your balance grow slowly, and it feels like your sacrifices aren't paying off yet. This is the critical period where most people lose interest and abandon their financial goals. However, as you cross the 10-year mark, a quiet transformation begins to take place within your account. Your interest starts generating its own interest, and the growth curve begins to tilt sharply upward. You suddenly realize that your money is working harder than you are, creating a momentum that feels almost like magic. The true shock comes when you compare the cost of starting now versus waiting just a few years. A 20-year-old who invests $5 a day can retire with over $1 million in the bank. If that same person waits until they are 30 to start, their final nest egg is slashed by more than half. This revelation creates a sudden and uncomfortable friction with your old spending habits. You begin to view every subscription service and impulse buy as a direct theft from your future self. The comfort of your daily routine starts to crumble as the mathematical reality of lost time sets in. The real crisis isn't a market crash or a bad economy, but the realization of how much potential wealth you have already let slip away. You look back at years of trivial spending and see a mountain of missed opportunities. This is the moment of truth where you must decide to either change your path or remain stuck in the cycle. Suddenly, that $5 bill in your hand feels heavy with the weight of its own potential. It is no longer just a piece of paper used for a temporary caffeine fix, it is a seed for your future freedom. Every financial decision you make becomes a conscious choice between a fleeting moment of pleasure and a lifetime of security. Historical data confirms that the stock market has survived every war and recession to reach new heights over the long term. The numbers prove that the greatest risk you face isn't market volatility, but your own inaction. The math is cold, hard, and completely indifferent to your excuses or your fears. Once you see the trajectory of this exponential growth, you can never look at your finances the same way again. The veil has been lifted, and the blueprint for wealth is now clearly visible in front of you. You are standing at a crossroads where a single small change will permanently redefine your financial destiny. If you had started putting that $5 into a low-cost index fund 30 years ago, the result would be staggering today. We are not talking about a few extra $1,000s to pay off a credit card or buy a used car. You would be looking at a balance that rivals the retirement savings of most corporate executives. At a standard historical market return, that single daily habit transforms into over $300,000. This is not a theoretical projection or a marketing gimmick used to sell you a complex financial product. It is the undeniable outcome of compound interest working relentlessly while you go about your daily life. The real crisis begins when you realize how many $5 bills have already slipped through your fingers over the last decade. Every year you waited did not just cost you the principal investment, but the massive exponential growth that happens at the end of the cycle. This realization often feels like a punch to the gut for those who have ignored their finances for years. You are now facing the uncomfortable truth that your current financial struggles are likely the result of these tiny, invisible leaks. While you were worried about the big bills, the small change was the real thief of your future freedom. This gap between where you are and where you could have been is the primary obstacle to your peace of mind. This discovery changes everything because you can no longer claim ignorance about how wealth is actually created. The myth of needing a high salary has been completely dismantled by the simple power of a $5 bill. You are now forced to choose between the comfort of your old habits and the discipline of your new reality. Waiting even one more week to start this process is a decision to set fire to your future wealth. The clock is ticking, and every moment of hesitation is an expensive mistake that you can never truly recover. The stability of your old financial life is gone, replaced by a sense of urgent necessity to reclaim your future. Driven by this new urgency, many people rush to open their first brokerage account with a surge of adrenaline. They expect the process to be as simple as buying that cup of coffee, but they are immediately met with a wall of technical jargon. Words like expense ratios and ticker symbols begin to cloud the initial clarity of the $5 plan. The first major obstacle is the temptation to overcomplicate a strategy that was designed to be effortless. Instead of sticking to a basic index fund, you might find yourself listening to self-proclaimed experts who insist on picking individual stocks. This shift from passive investing to active gambling often leads to the first significant loss, shaking your confidence before the journey truly begins. As you try to cut back on those trivial expenses, you quickly realize that your social circle might be your biggest liability. Friends and coworkers often react with skepticism when you decline an expensive lunch or a nightly outing. They don't see the million-dollar vision, they only see you being frugal over a few dollars, creating a persistent psychological pressure to conform. Even when you manage to ignore the social noise, the smallness of your daily contribution can start to feel discouraging. Looking at a balance of only $35 after a full week of discipline makes the goal of $1 million feel impossibly distant. This is the valley of disappointment where the effort seems high and the tangible reward looks like a rounding error. Just as you find your rhythm, the market inevitably takes a dip, and your hard-earned savings begin to shrink. For a beginner, seeing a negative red number on the screen can feel like a personal failure rather than a normal economic cycle. The fear of losing what little you have often triggers the impulse to withdraw everything and return to the safety of a zero-interest checking account. During these initial stages, many discover that not all investment platforms are created equal. Some traditional banks and brokers hide predatory fees in the fine print that can eat up a massive chunk of your $5 contribution. It is a frustrating realization that the system often seems rigged against the very people trying to build their way up from the bottom. Life has a way of throwing unexpected obstacles at you just as you commit to a new financial path. A flat tire or a sudden medical bill can make that daily $5 commitment feel like a luxury you can no longer afford. Most people treat these common setbacks as a sign to stop entirely, rather than a temporary hurdle to be cleared. Through these early failures, a vital lesson begins to emerge about the nature of true wealth building. You realize that the math of the market is only half the battle, the other half is the psychological war against your own impulses. Success isn't about finding the perfect stock, but about developing the iron will to keep going when the numbers aren't moving fast enough. This psychological friction often leads to the dangerous temptation of borrowing from your future self. You might justify skipping a few weeks of contributions to cover a weekend trip or a new gadget, promising to pay it back later. However, these small breaks in consistency act like holes in a bucket, draining the momentum of your compound interest before it ever gains speed. Many people also fall into the trap of waiting for a more convenient season of life to truly commit. They tell themselves that they will start in earnest once they get a raise or when their debt is fully cleared. This logic is a mirage because life will always present new expenses and reasons to delay your financial independence. As you navigate these internal struggles, you may also face external pressure from skeptics in your social circle. Friends might mock your frugality or point to a recent market dip as evidence that your strategy is a losing game. This social friction tests your conviction and forces you to decide if you value their approval more than your own long-term freedom. You will soon discover that the financial world is filled with noise designed to distract you from your simple daily habit. High-frequency traders and sensationalist news headlines thrive on the volatility that scares the average investor away. Learning to tune out this chaos is a mandatory skill if you want to protect your capital from emotional decision-making. Even when you stay the course, there will be periods where the growth feels painfully slow or even stagnant. You might look at your account after a year of discipline and feel frustrated that the balance hasn't reached a life-changing sum yet. This is the plateau of boredom, the exact point where most people quit just before the math starts to work in their favor. The breakthrough occurs when you finally stop viewing that $5 as a lost luxury and start seeing it as an acquisition of power. You are no longer just saving money, you are purchasing a stake in the global economy and the innovation of the world's largest companies. This fundamental shift in perspective turns a daily chore into a strategic mission to reclaim your time and your future. This shift in perspective is your greatest weapon against the consumerist culture that surrounds you every day. You are now analyzing every transaction through the lens of opportunity cost rather than immediate gratification. The conflict is no longer between you and your bank account, but between your current desires and your future freedom. Let's look at the numbers that the skeptics often ignore when they mock the idea of saving small change. If you invest that $5 into a diversified portfolio, you aren't just betting on a single company or a lucky break. You are capturing the collective growth of human innovation and global productivity over decades of progress. The biggest threat to this steady progress is the seductive allure of get-rich-quick schemes that promise overnight success. Many people abandon the $5 blueprint because they see others making fast money in volatile assets or high-risk options. They trade the certainty of the snowball effect for the high probability of a total financial wipeout. You might hear critics argue that inflation will eat away at your future millions, making the effort feel pointless. While inflation is a real factor, it is exactly why you cannot afford to keep your money in a stagnant savings account. Investing in the market is one of the few ways to ensure your purchasing power actually outpaces the rising cost of living. There is a common debate about whether you should invest while still carrying high-interest debt like credit cards. The math usually favors paying off the debt first, but the psychological habit of investing is often more valuable than the interest spread. Balancing these two priorities requires a level of financial maturity that most people never bother to develop. The most profound realization comes when you analyze the relationship between time and capital in your investment journey. In the beginning, your contributions are the primary driver of growth, requiring discipline and sacrifice. Eventually, the market returns take over the heavy lifting, and the growth of your wealth becomes independent of your daily labor. Many investors paralyze themselves by trying to wait for the perfect moment to enter the market. They fear buying at the top and losing money immediately, so they sit on the sidelines while the best days of growth pass them by. History shows that time in the market is infinitely more important than timing the market for long-term success. As you dig deeper into the mechanics of wealth, you see that the $5 habit is actually a filter for your character. It tests your patience, your resilience, and your ability to think in decades rather than days. This internal transformation is what truly prepares you to manage the wealth that the snowball effect will eventually deliver. This psychological shift is where the real battle is won or lost. While the math of compound interest is a simple calculation, the discipline to maintain it through economic storms is a rare human trait. You are essentially fighting against a survival instinct that prioritizes immediate consumption over future security. Most people are lured away from this path by the siren song of get-rich-quick schemes and high-risk gambles. They see a headline about a viral meme coin and feel that their $5 daily habit is too slow to matter. However, these shortcuts usually lead to a dead end, leaving the gambler with nothing while the slow investor quietly builds an empire. Consider the hidden cost of every day you spent waiting for the perfect opportunity to begin. That missing capital didn't just disappear, it took with it the potential for decades of exponential growth. When you analyze the numbers, you realize that the most expensive thing you ever bought was the comfort of procrastination. You might worry about inflation eroding your purchasing power or a market crash wiping out your gains. While these are valid economic concerns, they pale in comparison to the risk of having zero assets in your senior years. History proves that the market has always outpaced inflation over long horizons, rewarding those who stayed the course during the chaos. The confrontation becomes personal when you realize that your daily latte or streaming service is actually a luxury you are financing with your future freedom. It is a direct trade-off between a temporary dopamine hit and the permanent security of $1 million portfolio. Once you acknowledge this trade, every dollar you spend becomes a conscious negotiation with your future self. The data is clear. The difference between a life of financial struggle and one of total independence is often just a few $100s a month. This isn't about being cheap or living a life of deprivation, it's about strategic capital allocation. You are now equipped with the knowledge to stop being a victim of the economy and start being a beneficiary of its growth. After mastering the mindset and the math, you might feel like your financial destiny is finally sealed. You have automated the contributions, tuned out the noise, and accepted the long-term nature of the game. At this point, it seems like the story is over and you can simply sit back and wait for the millions to arrive. But then, the unthinkable happens. The global economy enters a tailspin unlike anything we have seen in decades, and your portfolio begins to bleed value faster than you ever imagined. The $5 a day dream suddenly looks like a house of cards collapsing under the weight of a systemic crisis. Watching your hard-earned savings evaporate in a matter of weeks creates a paralyzing sense of defeat. You start to question if the blueprint was just a fairy tale designed for a different era. The logic of compound interest feels like a cruel joke when the baseline itself is shrinking toward zero. The skeptics return with a vengeance, pointing to the red screens as proof that your discipline was a waste of time. They mock the idea of skipping small luxuries only to lose the saved capital to a market that seems rigged for the elite. It feels as though you sacrificed your daily joy for a promise that the world was never going to keep. This is the moment where most people finally break and liquidate their positions to save what little remains. The emotional pain of loss outweighs the rational hope for a recovery that feels further away with every passing day. You might decide that perhaps you were never meant to be wealthy and that the simple life of a consumer is safer. As you look at your depleted account, it seems the experiment has failed and the journey has reached a bitter end. The math did not account for the sheer unpredictability of human fear and global instability. You are left standing at the crossroads of a broken plan, ready to walk away from the investment world forever. However, just as you prepare to close the door on your financial future, a startling realization begins to emerge from the wreckage. You notice that while the prices have dropped, the actual value of the companies you own has not disappeared into thin air. A hidden mechanism is at work beneath the surface of the panic, one that changes everything you thought you knew about risk. The real secret is not just about the $5 you invest, it is about what happens during these exact moments of total despair. There is a final, critical piece of the puzzle that separates the temporary savers from the legendary wealth builders. If you stop now, you miss the only window where the snowball effect actually transforms into a mountain. This is where the dream usually dies for the average person as they watch the screen turn red. You feel the weight of every $5 sacrifice suddenly transform into what looks like a wasted effort. It seems as though the system has finally won, leaving you with nothing but a bitter lesson in lost time and effort. Many people close their accounts at this exact stage, convinced that the game is rigged against the small investor. They return to their old habits, buying the daily coffee and accepting a life of financial mediocrity as their inevitable destiny. To them, the story of the $5 millionaire is just a fairy tale that crashed against the harsh reality of a volatile economy. But while the majority walks away in defeat, a small group of investors sees something entirely different in the chaos. They understand that a market downturn isn't a signal to stop, but a massive discount on the price of their future freedom. This is the moment where the true power of the strategy is finally revealed to those who have the courage to stay. When prices drop, your $5 actually buys more shares of the world's most profitable companies than ever before. You are essentially supercharging your snowball while everyone else is running for cover in a state of panic. This hidden accumulation phase is the secret engine that drives the most explosive growth once the market eventually recovers. The math shifts from simple addition to a powerful multiplication that most people never stay around long enough to experience. By continuing your habit during the darkest days, you are lowering your average cost and positioning yourself for a massive rebound. What felt like a total loss was actually the greatest buying opportunity of your entire lifetime. This realization changes the entire nature of your financial journey from a desperate struggle into a strategic victory. You no longer fear the volatility because you know it is the very thing that accelerates your path to the $1,000,000 mark. Now that the veil has been lifted, you are ready to see the final calculation that makes this wealth inevitable. As the market stabilizes and begins its inevitable climb, the true power of your consistency is finally unveiled. Those extra shares you accumulated during the downturn act like fuel on a fire, accelerating your portfolio's recovery far beyond the previous peaks. You are no longer just recovering what was lost, you are witnessing the explosive birth of real wealth. This is the moment where the math of the snowball effect shifts from a slow crawl to a vertical surge. Every $5 you invested during the panic has now doubled or tripled in value as the global economy regains its footing. The discipline of the past few years has created a foundation that is now capable of supporting a skyscraper of capital. You begin to see that the latte millionaire blueprint wasn't just a catchy phrase, but a mathematical certainty waiting to happen. The small, trivial daily expense you sacrificed has transformed into a massive engine of passive income. The numbers on your screen are no longer just digits, they represent a total shift in your life's trajectory. When you look at the final calculation, the results are nothing short of shocking for anyone who doubted the process. By sticking to your $5 commitment through the highs and the lows, you have bypassed the struggles of the average consumer. You have effectively bought back your time, one small daily contribution at a time. A critical threshold is crossed when your daily investment returns begin to dwarf your actual out-of-pocket contributions. Your portfolio is now generating more wealth in a single afternoon than you could save in an entire month of labor. This is the ultimate goal of the snowball effect, the point where your money works harder for you than you ever worked for it. The skeptics who mocked your small savings are now left wondering how you managed to build an empire from pocket change. They failed to realize that wealth isn't built through a single lucky strike, but through the relentless application of compound interest. You have proven that the barrier to entry for financial freedom was never a high salary, but a high level of discipline. The emotional weight of financial stress begins to lift as you realize you are no longer a slave to the next paycheck. This freedom is the direct result of every coffee you skipped and every impulse purchase you avoided in favor of your future self. You have successfully navigated the psychological minefield of the market and emerged with a legacy. This climax is the realization of the promise made at the very beginning of your journey. The shocking results aren't just about the $1,000,000 balance, but about the person you became to achieve it. You have mastered the most powerful force in the financial universe, and the path ahead is now paved with total independence. This independence is the ultimate proof that the math of compound interest never fails those who remain disciplined. While the world focused on short-term fluctuations, your automated $5 were quietly acquiring assets at a fraction of their future value. This mathematical certainty is what finally transforms a modest daily habit into a seven-figure reality. As the years turn into decades, the interest earned on your interest begins to dwarf your original contributions. You are no longer pushing the snowball, it is now an avalanche of capital moving with its own momentum. The wealth you see today is the physical manifestation of thousands of small, disciplined choices made over a lifetime. This is the moment where the blueprint proves that grand results do not require grand beginnings. You have effectively traded the fleeting taste of a daily luxury for the permanent security of a diversified empire. The trivial $5 has been reclaimed from the void of consumerism and forged into a lasting shield for your family. Every myth about needing a high salary or a secret tip has been dismantled by your own bank statement. You didn't need to predict the future or gamble on the next big trend to win this game. Your victory was secured the moment you decided that time was a more valuable asset than any individual stock pick. The true revelation is that financial freedom is not just a destination you reach, but a state of mind you cultivate. You now possess the rare ability to look at a volatile world and see only opportunity where others see fear. This internal transformation is the greatest dividend your $5 investment has ever paid. Your journey stands as a living testament to the power of the snowball effect and the resilience of the human spirit. The shocking results are finally here, proving that anyone can build a legacy through simple, unwavering action. You have officially turned the impossible into the inevitable, securing your place among the few who truly own their time. Now that you have secured your future, the impact of this journey extends far beyond your own bank account. You have created a blueprint that can be passed down to the next generation, breaking the cycle of financial struggle forever. This isn't just about money, it's about the legacy of discipline you leave behind. Your life is now defined by choices rather than obligations. Whether it's retiring early, traveling the world, or supporting causes you care about, the $5 sacrifice has bought you ultimate autonomy. The world looks different when you are no longer racing against the clock to pay for your existence. You have debunked the greatest lie in finance, that wealth is only for those born into it. By simply reclaiming your lost capital from trivial expenses, you prove that consistency is the ultimate equalizer. The math was always on your side, waiting for you to take the first step. The journey from a daily coffee to $1 million portfolio is officially complete. You are the living proof that the snowball effect is the most powerful force in the universe when paired with patience. The shocking results are no longer a theory, but your new reality. But while mastering the snowball is the first step, there is another layer to this game that most millionaires keep hidden. Building wealth is one thing, but protecting it from the hidden taxes and inflation traps of the modern world is a different challenge entirely. You have the engine, but now you need to know how to shield it. If you want to ensure your hard-earned empire stays yours, you need to understand the mechanics of the next phase. In our next deep dive, we explore the specific assets that thrive when the dollar loses its value. Don't let the system take back what your discipline has built.